and this is a typical crypto thing where as soon as you see something that's successful, you see a million copycats rush in to try and take advantage of like that success, and maybe they get some sort of percentage of the market share that's been created. And Pub Fund, like we already know, makes like crazy money on their launchpad, and so it makes sense why you see competitors, in particular Radium, who owns the like LP liquidity of any graduated token on Pump Fund, and knew that Pump Fund was going to create their own AMM, like for them to get into this game. The question is like, how do you, like, what's the strategy here? You can't just come in and have a similar product. You need some sort of differentiation, onboarding strategy to make sure you can capture market share right away.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey guys, welcome back to another episode of 0x Research. Today, I am joined once again by Westie for another Danny and Westie Power Hour, bringing it to you here, not live, pre-recorded, from our home studios. How you doing, Westie?
Doing pretty good. Can't complain. Got through another week in this crazy industry. A lot to talk about.
Westie bought the bottom. He sold the top. He rebought the bottom. He's thinking about reselling the top. Before we get into anything, we got to talk about permissionless. It's coming up end of June, 24th through the 26th. We want to see you there in New York. Westie and I will both be there. A bunch of other people will be there. Fearless Leader Bach will be there. Ryan Cashflows Connor, plenty others. So if you want to come meet some folks from around Blockworks, but also around the industry, stay up to date with what's going on. 0x10 is the code. Link in the description as always. Get your tickets, come out, see us there. Buy plenty of tickets using 0x10 because, you know, we want the credit. We want the clout over all the other podcasts, which might be hard. You know, Forward Guidance, they're kind of a behemoth, but you know, I know you 0x Research listeners can do it.
We got a cult following, so all of our listeners better use our code and show up. I'm hearing either the Blockworks Research or the 0x Research booth is going to be banging permissionless, so come through.
We are absolutely cooking. There's talk of some crazy things going on. There's talk of a dunk tank. You might get to dunk Boccaccio yourself at this event. It would be absolutely insane. We'll see if it happens. You're not going to find out unless you're there. So we'll see you there, end of June, 0x10. Let's jump into it. As always, I think we can talk markets a little bit. I feel like every time I have you on, Westie, we'd like to talk and just get your thoughts, because the chat, the Telegram, the audience always wants to hear from you. How are you feeling right now? I know probably a lot of people that stay up to date in the 0x Research Telegram are aware of the ongoing thesis of bidding and holding some of the strongest assets, hot air rises. But how are you feeling right now? How are you feeling going forward?
Yeah. So how I'm feeling now is a little different than I was feeling, let's say, a few weeks ago. I was able to correctly identify a bottom as it was happening in real time in the 0x chat. So alpha for all the chads in there. But yeah, basically my target at that point was 95,000 on Bitcoin, and we got there this week. And so at this point, I can't say with any confidence which direction I think we're headed. Bitcoin continues to be extremely strong in the face of continued macro headwinds, with relative strength against U.S. equities, and just every day continues to outperform, and to my amazement, really. So it's hard to ignore Bitcoin's strength on a relative basis. But we're also at a weird inflection point with the stock rally of people not being sure if there's going to be any follow through or not. And so at this point, it's definitely, at least in the short term, a lot of uncertainty. And and to me, probably the most uncertainty on multiple time frames that the market's probably had in a long time. Like, to me, like very long term, Bitcoin is like in crypto is an incredible bet still in my mind, but it's like this short term of like the next few months and then medium term of the next year or two. That's still like a huge question mark just because of all that's happening in macro. But then there's a lot of interesting or rather uninteresting things, which we'll talk about in this pod, of like stuff going on within the crypto industry. Like good things being stable coins continuing to rise, and hopefully we get some legislation passed soon on that front. But in terms of other innovation, we are kind of in a weird mode right now where people, I think, are attaching themselves to the clearly beneficial things of this cycle, at least from a cash flow perspective, which have been meme coins and meme coin trading and perps trading. So like those continue to do well in sort of this pocket. Like certain memes such as Farcoin, you know, hotter rises leading the way, and Hyperliquid also getting a pretty strong bid. But beyond that, in terms of new things, I feel like the market and also just me not really excited about what's going on elsewhere. But yeah, that's a long rant of overall how I feel at the moment about the market.
That's fair. I think the timeline has been riddled with the crime season, either allegations or revelations. Move has been a chief one there. There's been a lot of recent raises or information about past raises, current raises that I don't know, people have issue with. Some debates about do VCs matter, like if you can't outperform Bitcoin, what have you. There is a lot of I think pessimism is top of mind for a lot of people, and maybe that's expected because we're on the sort of the back half of the downward sloping curve after a bit of a blow off in excitement earlier this year, end of last year. I guess one of the big ones right now is there has seemingly been a shift on the Ethereum side of things. The ETH Foundation. It's funny because I don't think there's a coherent like phrase or word to describe what is happening, because if you call this an ETH pivot, some of the people who are like strident ETH supporters will say, no, it's not a pivot. This was always the plan. And then others will say, no, this is clearly a pivot. They're massively changing direction. But I think the main sort of gist of what's going on is we are starting to see a more clear picture of some new people in at the EF changing some practices, like more communication, things along those lines, opening up some of the like maybe past issues that foundation has had. But then two, really nailing down like what's the strategy for ETH going over the next like year or two, and being a bit more pointed about like, the network and L1 potentially needs to scale a lot more than we were previously anticipating or thinking we ever should. And putting that on a much shorter and faster timeline. So looking at, orders of magnitude of potential like scaling in, be it a year or two rather than like a 5 or 7 year plan, which I think a lot of people in the industry have grown used to from that organization. I guess I want to kick it over to you. I mean, and maybe we can start with the simplest one, which I think is kind of stupid to even debate, but like there's argument over whether this is a pivot or not. Some people think that like this is the plan all along, and other people say this is a clear pivot. So what's your take here?
Yeah, I have so many thoughts on the ETH pivot in general. Just so before I focused on data and product at Blockworks, like all of my research centered around Ethereum, rollups, MEV, liquid staking, etc. And I felt like I was banging my head against the wall for multiple years trying to get my voice heard of like this roadmap is not going to work. Like there's going to be specific downfalls or trade-offs being made that no one is noticing. And that's at the roll-up level. Like I even had some comments on MEV boost that, I predicted that like builder searchers and these like behemoths were going to emerge when that wasn't really the talking point. So yeah, I have a lot of like thoughts on ETH finally coming to a head of like things need to change. And yeah, I saw that one tweet from Sassel basically saying, no, this isn't a pivot. Like we've always been scaling the L1. Like that's always been in the roadmap. I don't know what anyone is saying, but I mean, it's pretty obvious that this is a pivot, not necessarily like a complete 180 pivot, but it's a complete pivot in the prioritization of the roadmap and like engineering resources, but also prioritization in the culture of Ethereum and the EF in terms of like what are the things that we need to focus on more, and also like you said, timelines being a huge component of like this isn't something we can put on a 5-year 7-year roadmap. These changes need to be implemented way faster than we currently are, because there's very real and pressing competition that moves quicker than we do. So that being said, yeah, this is entirely a pivot, and it's one that I absolutely love that's happening. Like obviously over time we've seen slowly but surely the Ethereum community and the foundation coming to terms with maybe we need to actually think about scaling the L1 and rethink our framing and our roadmap, to the Bankless episode where Dankrad and Ansgar were very clear in that things need to change. And there was a lot of talk on like, we're going to try and change. And now we're in the phase of like, show me that we're actually going to make this change. Like it's very easy to say, oh yeah, we're going to have a 2-year roadmap for this, but now it's about actually putting the pedal to the metal. But the more that things come out, the more there is sort of action and momentum. For me, I've been following Dankrad for years now, and he's always been my favorite Ethereum researcher. Like dude's a gigabrain. And in particular, his most recent post on the ETH research forums to me pumped me up, which was basically him verbatim saying the current way of doing things is likely to make Ethereum irrelevant over the next 5 to 10 years. Very explicitly saying if we do not make this pivot and focus on scaling the L1, we may be irrelevant in 5 to 10 years, which is not something anyone has ever admitted from the Ethereum camp. And it was definitely, I think, intentional as a gut punch to the rest of the Ethereum community, developers, foundation, of like, we need to do this now or else. And in that blog post, it outlined basically how they get to 100x scaling within the next 2 years and 2 to 4 years, basically, and maybe 1,000x. I think there's another question of, is this feasible? Because within his roadmap, he has real-time proving, or at the very least proving within one block for Ethereum, which right now is 12 seconds. But I hope as part of this pivot, they also reduce the block times. So it has sort of real-time proving, although it's not completely real-time within this roadmap, which he suggests is like within the year going to happen. So it's, the roadmap at the very least is dependent on certain advancements within the engineering and tech space. And so there's sort of questions around that. There's also questions around, has the Ethereum Foundation actually, like, are they actually going to implement things as fast as they say they want to? I feel like if you were to make a bet every hard fork that it gets pushed back double the amount of time, like in every previous hard fork, like you've typically been right. Like they're always so late, even on their conservative timelines. So there's still a lot of questions on, can it be done from a practical angle? And then there's obviously like, is it too late to pivot with respect to competitors, which is another question. I'm not sure where you want to take this next, but that's like a long rant to say excited about the pivot, and now it's like, can they actually follow through?
Yeah, I like that. You answered the question by not answering it, by just assuming it is a pivot, which I think is funny, but I also think is fair, because I'd agree with you there. I think the big thing, there's a lot sort of circling around here, like, for a long time, discussions were not even, we're very focused on rollups, L2s, allowing them to scale execution in place of the layer one. And recently, like over the past year or so, largely with Base's rise, has been like, well, we're not even scaling, blobs or our DA service to these rollups fast enough for them to even do what we'd like them to do. And that led to a lot of problems. One, people are upset at the, stagnation of the L1, but then they, people were becoming upset at the stagnation of the L2s as well, running into strict limitations because, we were not also scaling the services to them as well. So I think, and as part of that, like there's been these conversations for a long time now of, our mainnet and L2s like competitive? Does it benefit each other? If you scale one or the other, is that like good or bad for the other? Are they like vampiric, like sucking the blood off of ETH? We don't have to get too much into that, but I think as part of this change in stance and like pivot, there is very clearly going to be like a change in how other actors within the space are going to approach building going forward, almost certainly, right? If, for example, if there had been no priority ever on L2s and ETH had just been scaling, today would look very different. Now, in a world where we're committing to, maybe scaling the L1 a certain amount, maybe scaling, DA and other services a certain amount, that's going to play into the, if you want to call them business decisions of other actors building either on the chain or wanting to maybe build a roll up or some other sort of thing on top of either using ETH. It changes how that plays. I guess maybe the one question to get to is like, how do you see this playing out? Like I see comments, and something that I've thought for a long time actually with how Ethereum had been moving was that inevitably like a Base, for example, would move off of Ethereum at some point because they just weren't keeping up with, Base wants to do like 10, 100x scaling improvements like every year. And, if ETH was not keeping up with that, not from a DA perspective, not from any other perspective. And so it's like, it seemed kind of natural that at some point they would just outpace them and go to a different solution or build their own thing, whatever it would be. How do you feel about this picture going forward? Like, if we're going to scale the L1, if we're going to also scale blobs too, and like maybe we're going to bump up the speeds of both of these things, like, is everything going to stay the same? Are L2s and L1s still going to be just like as they were? Do we expect more competition? Are L2s going to move away now? How are you thinking about it?
Yeah, so on the question of whether L2s, in terms of where they're posting their data, like whether they're going to change that is entirely dependent on blob and blob pricing and the roadmap. Even though there's going to be more of a focus on the L1 and scaling the L1, the like blob roadmap, if you will, hasn't changed. And so that question remains the same no matter what sort of path they went down. So to me, like that question is kind of somewhat irrelevant when it comes to this pivot talk, just in terms of like thinking through different scenarios and like what this means, like what scaling that one actually means for rollups. This is definitely part of a broader question, which is like, is having a stronger L1 like better for L2s and rollups, or is it actually worse off because now you have a new competing execution layer? And I think when you think about it deeply, for the most part, it's actually beneficial to have like a stronger L1 for L2s because L2s get much stronger properties. So if you reduce the block time, reduce finality, and have more like valuable state at the L1, then plugging into that becomes more valuable because now you as a rollup have, shorter finality, stronger guarantees, more assets that can be bridged over. So in general, it's more beneficial. in terms of like having an execution layer that's now competing, if you look at even the most optimistic projections, like even if they get to over like 1,000 TPS, most rollups can at least 2 years from now, especially those that are like taking the pure rollup route of like we're gonna have a single or maybe a couple sequencers and just like make this thing go crazy, like have like crazy TPS. For those rollups, like it's not really competitive because the type of applications that are going to be building there are not also going to be building on the L1. What the L1 will be competitive with are these like EVM clones of Geth that have like no differentiation from any meaningful standpoint, whether that be scale, architecture, like enshrined applications. Like there needs to be some sort of moat that you're creating. And so if you're one of these, like copy pasta clones, like that's completely competitive. But at the same time, if that's what you were building anyway, like you were probably doomed for failure because you weren't creating any specific moats or value propositions against any other rollup. So in the whole, I'd say having a stronger L1 is better for L2s in that, like, if anything, it makes the compelling case to build an L2 like more compelling than otherwise, and that like this blob conversation or where you post your data remains the same. Like if you're super performant, you're going to use Celestia anyway. So I think net this is beneficial for rollups and beneficial for Ethereum.
I think that's a fair take. It really taps into like some core things here. Just in terms, like if you scale the L1, you're adding a ton more supply to the market in terms of like block space or what have you. It doesn't necessarily change the demand equation for any of the other things that are happening in the space. Coinbase is probably always going to be able to pull the demand lever for their application because they can, use their distribution funnels to send users onto their chain and use apps on there and make it seamless, like within the Coinbase app, for example. Other, like you said, copy pasters that spit something out over a weekend and don't differentiate and don't have any drivers to get people to use the apps there, they're going to struggle in either paradigm here. So it doesn't change much. So I think that's a fair take all around. One of the other big things we're seeing, I think this is a little bit silly, but I want to call it out because I'm seeing a lot more conversation along these lines, is Ryan Sean Adams has come back from a little bit of a break, it seems, but alongside this like ETH pivot talk, he's promoting a little bit of a different take that people should be even more memetic and even more like religiously fevered behind ETH. And that is a major reason for why it has failed so far, not because it technologically could not keep up with competitors, but because people didn't meme it hard enough. I think is really the gist of this piece, which I find kind of silly. Sure, in a raging COVID style, everyone has money to throw around, and like, we've seen it with XRP as well, right? Like the people get on TikTok, they say XRP to 10K, and I'm sure that convinces some people that want to throw their money into a speculative gamble to do so. But like fundamentally over the long term, I don't know that that's going to be a sustainable viewpoint worth holding here. Curious your thoughts, because I think if you look at any meme coin, you'd go, well, this would be an awful strategy for a long-term asset. What are your takeaways?
Yeah, I actually co-tweeted this one basically along the lines of like, oh, like our purity tests weren't enough. Like we need to triple down. Like if you're caught selling your ETH, like public flogging. Like if you're talking about Solana, like death penalty. And that was basically the vibe I got from this post. There was this also similar Bankless episode from Sam K of Frax, talking about similar things, where it's basically like F the DCA, Like we should be entirely talking about this like mimetic, this like it's like other aspect of ETH, this like commodity money. It's like basically the fairy dust, like all the stuff that's entirely what we make of it. And I think it's like it's a reasonable thought process to get to of like, okay, I've looked at the fundamentals of this thing. Like it shouldn't be worth what it's worth. Therefore, in order for it to be worth more, we need to add this like speculative mimetic premium to it, because as we've sort of seen after the glass was shattered in COVID of like zero interest rates, stimmies, of like all the assets that did extremely well, but did so because of some like animal spirits mimetic like additional premium to what the actual fundamentals of these businesses are. And Tesla is like a perfect example of like $1 trillion company that may not be trading perfectly in line with actual fundamentals because there is this like cult like mimetic aspect. So it makes sense why you would want to recreate that. The problem is once you say this is the strategy, it doesn't work. Like it needs to be covert, and it needs to like the people need to basically believe in some bigger mission. But as soon as you like break the glass of like, no, we're only believing it to like create this like self-fulfilling prophecy, it doesn't work. Like that's just not how these things actually operate. I think what this basically gets to is like the admission that on a pure fundamental basis, it shouldn't be worth what it's worth. And I had another post similar to this where I think all L1s are going to also face this issue, where there's been this like quote unquote L1 premium, or this like premium for like blockchains in general, that they might capture some like far out there future value. And so based on like their fundamentals, they're trading way over their skis. And at a certain point, we're going to come back to reality of like these things don't make as much money as we think. And the only ones that make a lot of money are ones with a lot of speculative fever on that chain, because people are willing to pay for premium block space. So yeah, that's basically what I think about this. Is they've come to terms. This thing is overvalued, and they're trying their best to create some sort of way to give it value. And I think it's gonna not work as intended.
Yeah, I think that makes a lot of sense. I think if you're coming from a position where maybe at some point or at one point, you know, there was a high amount of belief in the fundamentals behind something plus the speculative premium maybe on top of that. But if you're getting to a point where you're saying we failed and it's because we weren't speculative enough, I think it's just as you're saying, it implies that the fundamental foundation there is even weaker than you thought in the first place, which it's just not, I don't think it's a good look to be broadcasting, and I don't being so like openly like, let's really turn this thing into a meme coin. That doesn't seem, that's not going to be a long-term winning strategy. I mean, if you've studied, as I mentioned, any meme coins chart over the long run, you know, they tend to look pretty spiky. You know, even the king of all of them, with Doge, or maybe Bitcoin, if you call it that one, they you know, they have their crazy runs and high peaks, but then they're beset with years and months of decline and nothingness happening. And all the smaller ones, right? It's usually flashes in the pan. So when there can be fundamentals, it's a bit silly to toss that aside for pure speculation, I would say. And I think you made a good point as well, like about the broader industry. And I think some of that is related to some of the sentiment right now of like the market structure, people being upset at like VCs, being upset at like all of these raises and new projects that like, you know, raise X amount at X valuation, and then they drop the token at 1 or 2 or 5 billion FDV. And it's like, well, no one in the liquid market is going to, with like any rational sense of the world, is going to buy that. So it's quite literally going to be a down only chart until it's minus 95% or what have you, which is not great. That's not great for just looking from like the outside POV in at like the broader industry. Like it just kind of asks like, what does it say about everything else that's here. Okay, I think maybe one last point on ETH that I'll just drop as a cherry on top, but I find it very silly that, you know, months ago, I think this was starting to become a discussion again, right? Like, let's scale, you know, solo home stakers. Like, maybe we need to rethink like them limiting the rest of the network. You know, Max Resnick was a pretty big proponent of a lot more scaling and doing it a lot more quickly. And then he, like, I think sort of his camp was shunned, and not that he was necessarily ousted, but I think he was kind of like, well, what the hell's the point of even trying if everyone's going to gang up on me and not want to work towards this? And he moved over to Anza and started working on Solana. I think it's just very, I don't know, it's very funny to see that they finally come around after shunning him away from the ecosystem and like that view to come to the same set of views, you know, a few months later.
Yeah, I'm sure he's feeling very, very vindicated right now. But yeah, I think the prevailing opinion now is like he was kind of a dick about it, but he was right. He was totally right. Most of what he was talking about was definitely like lowering the block time, given its impacts on MEV, but also scaling the L1. And like I completely agreed with both of those points at that time, and still agree with those points. So.
Yep. Yeah. He dropped a short tweet here on just going over this. Congrats to ETH on finally committing to scaling the L1. So yeah, I think he's definitely, I don't know if this is so much of like a victory for him because it's probably a little bit bittersweet, but either way, it's like, you know, hey, they finally came around to realizing what I had been saying. And that's got to be a little bit vindicating at the very least.
And also an important piece of what he said is like gas is basically an arbitrary constant within Ethereum. And we just set it arbitrarily based on what we thought was a limit on like certain hardware because they wanted basically Raspberry Pis to be able to run nodes and validators. But what Storm of Paradigm recently found is like the current gas limit is way lower than what it even could be at this moment, given conservative estimates. So yeah, like it's like as obvious as can be, let's increase the gas limit. Let's do it. So
yes, this I'll actually pull this one up as well because this was a really good one. I tweeted about this, begging the question, why did no one ever grab this data before or test this? But yeah, so just like you said, Storm dropped some data here indicating that all the node clients could support a substantially higher gas limit, something like 80 to 280 times what we're currently seeing today. So it wouldn't be crazy to start looking at like 10, 20, 50x increases potentially in short order, assuming that most of these clients would have no issue and some headroom above that. It kind of begged the question, like, why nobody was looking here for years and only now we get this type of analysis. And I think part of that was just the priorities. It's like, I don't know why there was this idea to completely give up on scaling the L1 at all, but there was definitely a pivot away from that at all. And now we finally pivoted it back and we're getting some data and some real ideas to actually go ahead and do so. So that's refreshing. We'll see if the timelines that are being thrown around hold up, and we'll see if some of the changes come through. And if they do, I think it'll be exciting. There might be a little bit of like a revival of ETH mainnet things potentially in the future if that does happen.
Yeah, I'm totally rooting for it too. Like a better Ethereum is better for everyone in this industry. So yeah, very, very much hoping they succeed.
Yeah, especially with a large majority of like DeFi capital and TVL still on ETH. Like, you know, I mean, there are times when, I mean, actually, right, for in recent times, it's been fairly usable because gas fees have been so low because demand has been so low. But to scale and have fees be low with high demand would be far more interesting, I think, right? Wanting to use the chain and being able to and not being priced out would be a far more rewarding experience, I think.
What's up, guys? Today we're joined by Antonio from dYdX. Antonio, thank you so much for coming on again.
Thank you for having me.
I'm curious what you think the landscape for perpetuals will be over the next few years. We typically see a lot of platforms and mercenary liquidity going from one to another. How do you see that shape up?
So there is mercenary liquidity to some extent. I think that's one way to articulate it. I think the other way to articulate it is what I was mentioning before in terms of the bulk of the liquidity will go where the users are rather than the other way around. And it's a two-sided marketplace, and it's something you absolutely have to bootstrap liquidity. I just feel pretty good about where we're at on the liquidity side, actually. And liquidity will continue to improve from here as users come and as the platform grows. So really the focus is more on attracting those end users, call it those individual traders. And there's a wide spectrum here from relatively retail users to pretty sophisticated but individual users. So in terms of how the landscape will evolve over time, it's similar to what I was saying before. It's a space that's really is finding product market fit now, certainly at least with the products like us or like Hyperliquid. I'm sure there will be more of those types of things over time. I know there are a lot of perp dexes, but we're the two main ones that are focused on this kind of order book trading model that's more similar, and to me at least has more obvious product market fit. But it'll become more of this competition phase for this landscape, and that's great for users. And I think this will drive a lot of great features, will drive both sides and everybody who's competing in this market just to build the best possible product, to offer the best possible go-to-market strategies, best possible incentives, all these kind of things for end users. But I think it will evolve over time, right? Like, if you actually look at the market structure of centralized exchanges and DeFi, it should be the same. And even if you look at spot DeFi, like it is the same. There's a pretty wide distribution of things that are used. It's like roughly Binance has like 50% of the market share, like OKX and a couple others have like, 10 to 25% each. And then there's a long tail after that. And so I think that's what this market will look like too. And I think one of the things we have going for us at dYdX is we are very long-term focused. Like I've been around at dYdX for almost 8 years at this point. So we're not going anywhere, that's for sure. And the second thing is it really allows us to take a long-term approach towards what we're doing. And in my opinion, this marketplace of perp dexes is really going to be one probably 2 to 3 years from now, I would say. And that's not to say what's happening now isn't important or isn't perhaps like an indicator of what's to come, but it's really going to be a lot of changes up until that point, I think. And then after that, there gets to be these entrenched market structures and entrenched liquidity and user bases where it becomes hard to disrupt after that, right? Like if you're building like a spot DEX today, it's kind of hard to just come in and compete with Uniswap or something. Or if you're building a centralized exchange, like you could have all the same features as Binance, but nobody's going to use your thing. No. And so I think it's like that type of dynamic that I'm expecting more 2 to 3 years from now. And so it's very important for us to go out and execute over that amount of time to really regain a lot of the market share that we had. And I think we have the opportunity to do that. I won't dive too deeply into this, and I'm not saying it's all this, but like there's obvious dynamics in DeFi, especially around token launches. Like when the dYdX token was launched a number of years ago too, like that was by far the biggest growth era for dYdX so far. And then you kind of see for the next like 2 to 4 years, generally after a token is launched, it's a bit of a drag on the ecosystem. It's like there's certain price dynamics, there's certain just brand dynamics around like how do people interpret your brand based off of that. So we're kind of at what I would classify the local minimum of that cycle. And then after that, after unlocks are done, after all these sort of things, then the token is sort of free after that. And it's able to just move at how it should move and be valued at what it should be valued at outside of market dynamics. And so I think we're entering like that phase. The point I'm making here is we're just at a completely different phase with this, and it's challenging to compete against things that have a new token. And obviously, like we had $15 billion of trading volume too when the dYdX token was launched. And not to say it's all that, like there absolutely are great things that Hyperliquid is doing from a product perspective, from a branding perspective, but that is a dynamic. And I think that dynamic will be most prevalent this year. And so again, that's really why I bring it back to the long term and bring it back to Like, the way I think about this is if I were genuinely like, oh, this market is going to be one in the next year, like I would genuinely be like, hey, we're in like a pretty tough spot. Like, how are we going to come back in the next year or so? And everyone should decide for themselves, but at least I believe that this market is really not going to be one for 2 to 3 years plus. And then the bulk of how valuable these things are going to be is going to be like the 10 years after that, where you get this entrenched market position and you have the network effects. And we're going to be, and so the question is like, who is going to be like, what is the order going to be like of, the top 3 or 4 or 5 that actually matter in that 2 to 3 years? And then second of all, are these things going to have longevity? And it's not just enough to be the biggest in 2 to 3 years from now. You have to actually stand the test of 10 years, 20 years to profit from that market position. So I think that's really the framework that I look at for how should these things be valued in the long term. And why I still feel like there's a huge opportunity for us. And just to finish that thought as well, longevity is something that is pretty rare in crypto. And so I think this actually the second part of my premise here, if you take it as it is, of like, hey, what's actually going to be here in 10 years from now and 20 years from now is a question worth asking as well. And I'm absolutely not like saying yes or no, like certain things will or won't be here, but I think it's a question worth asking. And it's something that not a lot of products in crypto actually have, this kind of longevity and this kind of trust. And we have really built that at dYdX. And that's something I'm proud of and something we will maintain for many years to come.
Oh, that makes a lot of sense. And completely agree with you on the token dynamics affecting protocol volumes. I think we see this across all products with new token launches, that there is increased volume, and it makes a lot of sense.
I guess speaking of demand and the more profitable side of things over the past year at this point, Radium LaunchLab is the counterpunch to Pump Fun, launching their own AMM. So Pump Fun essentially kind of not rug pulled, but essentially rug pulled Radium, being that they took away their graduation design of tokens that launch on Pump Fun, graduating to Radium at some market cap, now go to Pump Fun's own native DEX. So Radium, the announcement came a while back, but they launched this product back in late March. But I don't think we've had a good chance to really dig super into it. And there's been some more movement on this recently, but Radium's own LaunchLab, which is their launchpad product, has been exploring like some different ways to potentially scale this and like fight back or like capture market share from Pump. And one of those has been like rebranded versions of the launchpad. So a big one in the past like 2 weeks has been Bonk, or Bonk-based Bonk.fun, I think essentially is what it is called. And a lot of like, Bonk associated or like Bonk community members have been kind of rallying around this one. We have some data. I'm going to pull it up. Westie, I'll let you go ahead though. Like, I think one of the big questions that I have is like, I think it's interesting that Radium's going after this model of like these using they're sort of taking the morpho approach here, right? Where they build an architecture here that's like kind of modular and then let other brands put their branding and identity on top of it and let them like build their own version of it, maybe capture some portion of the fees and then take some base rate below that for themselves. That's basically the morpho model with vaults. I think that's interesting applying it here. I think the bigger question at play is like, is it going to work? Like, is the Pump brand and identity and like user mindshare around that product so strong? Can just like a slightly modified launchpad product change any of that behavior?
Yeah, I think this also gets into a broader question because like I'd say Radium's LaunchLab might be the most prominent of these like competitors to Pump Fun, but there's a ton popping up right now. And this is a typical crypto thing where as soon as you see something that's successful, you see a million copycats rush in to try and take advantage of like that success, and maybe they get some sort of percentage of the market share that's been created. And Pump Fun, like we already know, makes like crazy money on their launchpad, and so it makes sense why you see competitors, in particular Radium, who owns the like LP liquidity of any graduated token on Pump Fun, and knew that Pump Fund is going to create their own AMM, like for them to get into this game. The question is like, how do you, like, what's the strategy here? You can't just come in and have a similar product. You need some sort of differentiation, onboarding strategy to make sure you can capture market share right away. And I think this kind of model of allowing other brands to tap into what they have, I think it's like a pretty viable and interesting model. Because like even if you as Radium don't necessarily have the strongest relationship with the end user, you can attract other people that do have very strong associations, especially those within the sort of meme coin sort of sector. Bonk being the perfect example of having, you know, this brand that people, users associate with like community members, with followings that are trusted to have this launchpad and to sort of flow through you. And there's a partnership based on they have distribution, you have the tech and the liquidity, and it's like a perfect match made in heaven. So it makes a ton of sense to me. And yeah, you have our dashboard up here, and it seems like, you know, they've been doing a pretty good job, especially since Bonkbot went live. There's been a ton of new tokens launch on LaunchLab. Yeah, I'm definitely interested to see if this sustains over time.
Yeah. The other, I think the big thing that they did is they added some more customizability to the launches. So as a token creator, you can make some changes to what the bonding curve looks like, the amount of supply that's, you know, left for the liquidity pool at the end. Some different things like that, right? Like the supply of the tokens, some of these different parameters you can play around with. Whereas on Pump Fund, it is still a standard model. As far as I'm aware, they have not made any tweaks there, and they're still operating on their, you know, it's 1 billion supply every time. The amount required to make it through the bonding curve, graduate, is always the same. There's no differentiation there. That's actually kind of been a strength for Pump. The consistency of their like standard, and the fact that like when you see a Pump token contract ending, you can feel pretty confident about like the properties of what that token and like that contract address mean. You know, not that you can't be dumped on by other people, but there's, you know, nobody's going to rug pull the liquidity, things like that. Now, you know, a large enough holder could sell all their tokens and, you know, massively, you know, FSH the chart on you, but that's sort of the nature of permissionless trading. In the case, Radium's kind of giving that piece up by having more customizability, but I think they're sort of making a bet that it might open up like more playing fields and like different types of token ideas, and like, you know, it goes hand in hand, I think, with this like allowing these other brands to have their like branded versions of this of the LaunchLab product. If they can then also have like different token customization setups, and maybe that reintroduces like more demand for different like games to be played with tokens, which it essentially is all games. You know, we're either playing with like something that's funny, like it's just a funny meme and it runs up on that, or like news-based tokens, or a creator launches a token that's associated to them, different things like that. So maybe this opens up more avenues and they can play around with some of those ideas. The data is interesting because the immediate launch was like not super crazy. Like I think LaunchLab had like a few good days of quite a few launches and like a fair amount of volume. You can see that reflected here, like the fees, the amount of volume early on. They were doing in the millions, if not, you know, 8-figure plus days of volume. And then it kind of dried out for a bit. And then the Bonk Fund drop was another big like flash in the pan for them. But we're seeing that drift off already, and it's been about a week. And I guess it just has me wondering, like, are they doomed to kind of repeat that over and over again? Or is there a point where they can maybe continue to onboard some bigger names that build like a sustainable, like upward trend here to compete with Pump? One of the big areas that stick out to me is like Jupiter, for example. You know, they bought a stake in Moonshot, and Moonshot has its own launchpad. They haven't really done anything with that. Like, I feel like Moonshot's kind of gone by the wayside ever since the Trump token launch. That was kind of their shining moment, and they printed handsomely off of the transaction fees there. But since then, I don't think they've really had like much maintaining mind share. It does make me wonder though if other trading bots might consider making like a branded LaunchLab launchpad for their own, to integrate within their own bot and then allow users to, not only trade memes in, inside of a trading bot, but then also create and launch tokens directly. And then they could capture a portion of those fees, alongside Radium. I think that could be interesting. Maybe they're already pursuing this. I think there's always been a lot of different interesting ideas here. Like, should Radium even have their own trading bot in the first place? But this opens up another angle where maybe they could partner with some trading bots and drive volume directly to their product versus Pump.
Yeah, there's so many market structure questions when it comes to these like new launch pads launching, which is, the ultimate question is how do you drive value to your launch pad? But there's multiple methods to go because there's this constant tug of war of where does the value actually accrue? Is it like these launch pads directly, or is it the aggregators, like these trading platforms that sort of route through these platforms? So once you have multiple to choose from, do they just aggregate all of them? In which case, like, how do you actually change user behavior? Are you targeting the people that are constantly creating new tokens, give them incentives to come? Are you like working directly with these trading platforms or building your own to try and like showcase yours more than others? And there's like interesting questions of like, you think through scenarios and you're like, okay, let's say, Trump says like some sort of weird catchphrase on TV and people start creating tokens of that catchphrase and it starts catching on. Where is the canonical token going to come from, right? Like if you as a platform, you're fighting for memes to emerge from your thing. And so like what kind of like things go into deciding what tokens emerge? Like there's so many different factors, but do people trust one platform of another? Like if it comes from Pump, then does it have a bigger stamp of approval? Is it just these external like people try and do wash trading? Is it literally just a volume game? If so, like what can you do to like increase the volume of your platform versus others? Like, there's so many like nuance and small like points in this like new emerging game like trading venue where the problem is hard and complex, and it's going to be really interesting to see it all play out. My gut tells me that Pump Fun has some sort of lead and like brand association here, but at the same time, like of any possible sector, you would think Memecoin traders are the easiest to like to switch up their behavior to a new platform. But yeah, so I just have a lot of open questions. I'm super excited as like a third party viewer to see how the market evolves over time, and I think especially Pump Fun and Radium both have very viable like market strategies and placements of where they are currently.
Yep. Yeah. I want to echo everything you said and just re-highlight back to, and just because I've written about trading bots, I dropped a report back in March and we'll be dropping another one next week, but highlighting the value of them in this equation here. I love that we have this chart here that shows external trading platform volume through Pump Fun. We have it for Radium LaunchLab as well, but I think it's more informative when we look at Pump Fun specifically. But I just think it's really interesting to note that, depending on the time, this kind of fluctuates, but upwards of, anywhere from 35%, sometimes as low as 25%, but generally around a third of volume that flows through or is traded on Pump Fund tokens is coming from largely trading bots. Now we also have like Phantom represented here, though it's a very smaller portion. And then you have to imagine that Jupiter is a pretty large portion of tokens as well. But this is one reason why I highlighted that potential idea of like, if you look at Axiom or, Photon, why am I blanking on Yeah, Photon is that other big one there. Axiom, Photon, like BullX up until recently, their volumes have been dropping off a little bit, but like a couple of these big bots, if Radium were to have them launch their own branded launch pads using LaunchLab, like it could be pretty meaningful just given the amount of volume that flows through these types of users to pump fund today. Obviously, the one thing we know about pump fund is there are like a small set of creators that are making, you know, hundreds, if not thousands of tokens a day. So there might be a ton of activity that's just flowing through like a small set of users. You know, we see power law and a lot of these types of things, but if you can get some of those core users that, you know, use these trading bots and do a ton of volume on memes to, you know, use a branded Axiom or a branded Photon launchpad product, like just directly within the app that they're already using, that might be enough to like shift some behavior away. So I think that's a potential ace that they could have if you know, these platforms are open to doing a partnership like that, and it could be interesting. It could shake things up. One other thing maybe to mention, Boop. Boop is on the timeline. It's a similar vein here, another launchpad product, though this one got a little bit of like controversy around it. And so the big thing with Boop is some maybe strange criteria for an airdrop associated with this launchpad. And basically, if you were in the snapshot or were to receive tokens as a creator, it would ask you to launch a token in order to claim your airdrop. And then for your airdrop to get released to you, it would have to reach a certain market cap. And then that would like reduce the amount of time until you get to like receive your airdrop. And then for lower token tiers, you know, so creators who were going to receive like a $200,000 airdrop, you know, they needed to launch a token and have it hit a certain market cap to get that released sooner. For people with like maybe a couple $100, the stipulation was that you would then, you know, spend like half a sol or a sol buying tokens on the platform, and then they would unlock your airdrop and give it to you. But it seems like there were also some limits, like, you know, only a certain amount of people can get an airdrop of this tier. And so there was like a ton of gamification around this. It was very odd, but one of the big things was like it opened up this debate again of, you know, should creators with like their doxed, you know, Twitter accounts be creating these tokens that are worthless and then like dumping them on their followers?
Dude, this airdrop was so devious. Like, this was so like dystopian. But like I said earlier, because there's so many new launch pads coming to market, you need some differentiation. You need viral components. You need to change user behavior. I don't know if this will long-term change any user behavior, but it's at least interesting to get people using the platform and talking about Boop. What a silly name. But yeah, I was curious on the math because some people were getting some crazy airdrops, like six-figure airdrops. The problem was Boop as a token only had so much liquidity in it. It was like a very small fraction of the floating supply. And so when the 30 days was up for anyone to get their airdrop, it like the token price is probably going to be much less than it is now because you can only trade it on chain. And so I did some math. I'm like, okay, obviously the game theory is you want to get this thing as soon as possible, but you don't, like, you want to spend as little as possible or like ruin your reputation as little as possible. So I actually did the math. If you were to basically manipulate your token price to 5 million in market cap, which was the limit to have basically all of your 30-day waiting period wiped out, you'd only need to spend like $13,500 because you needed to spend enough to get it off the bonding curve. Then that was burned forever. And then you could just buy all of your token to 5 million. Once it gets there and you're unlocked, and you just sell it all again. And to do that, yeah, it would only cost like 13,500. So if your airdrop was like Bold here, which was 200 grand, it was actually in your best interest, as long as you had $103,000 on the sidelines, or you maybe get a loan, then you'd be able to do that little trick and get your Boop immediately and sell it before others, which I thought, like, I always love to run through scenarios, like what is positive EV, how do you like actually manipulate a certain scenario so that you know, you can benefit. Like, it's always fun to go through scenarios like this. And I thought that was super interesting too, that I don't know if they like did the math on whether this would be like cybleable. Yeah.
What I think is funny, and I think you're right, that like it is different at the very least. Like, let's say a ton of creators had played into this, right? It was a ton of mind share. Like, you could have seen, you know, a bunch of creator based tokens getting pumped up and all over the feed as a result. I think a lot of them had the opinion as bold here of like, I don't want to launch a token with my name on it. It's funny that I think when you game theory out like how to best approach the airdrop as a creator with a large drop, it basically incentivizes you to pump and dump a token. I think it's hilarious, and it really just highlights the. I mean, you said it yourself. Like, if you only have to spend 13K, and if a ton of these larger creators were going to receive an airdrop of, you know, 200K, 300K, 100K, it's like it highlights that incentive scheme that we see in a lot of cases where simply just shilling a ticker on the timeline can be all it takes to get a massive, you know, payday for a creator with a large following, and then they can just dump the thing either implicitly or explicitly. Either they're buying the token and then dumping it, or they're being paid to shill something and then dump it on their audience, essentially. So it's a little like funny and perverse to like basically bake up a model that directly incentivizes that exact behavior as you've outlined.
Yeah. And also, I don't think there's anything wrong with making a token as long as you were explicitly clear. This has no value. I'm making it because I'm getting an airdrop. As soon as you try and pump the token, that's when like there's issues. So yeah, to me it's like, hey, I'm gonna mint this token. It is worthless. Do not buy it. I'm just gonna sell my airdrop whenever I get it. Please do not buy this token. Like, if you said that, I think from like a moral standpoint, you should have no issues. You got free money. You were following the rules, and you were not doing anyone dirty. You were honest to any potential market participant. I think, yeah, just the fact that they even tried to do that, though, it's like I said, it's just devious. Like, it's worth. I can see why they did it, but I don't like it. I don't like it at all.
The Memecoin space is getting really competitive. The trading space has been competitive for a long time now. So, you know, I think people are open to trying anything. And even like we're seeing Pump Fun at the top of the pack, like they're playing around with different ideas, right? Like they've brought streaming back. They did a mobile app. They launched their mobile app a couple months ago. You know, they're playing around with some of the features in there, including like private chats and different things like that. I'm imagining they're going to try to lean in more and more to some of those social features. As Ryan Connor likes to say, you know, he thinks Pump Fun and like Twitter and TG is like the equivalent of, you know, sports betting and Barstool and, you know, iMessage groups. And it is pretty similar, right? Like people, they rally around these different memes, these communities, they message their friends. They say, hey, I made $100. Hey, I lost $1,000. Like, so Pump is definitely leaning into that angle. Like if they can capture more and more of the social piece that's connected to the trading piece, then it's going to be a bit more of an integrated ecosystem for them. I guess maybe only one other thing to comment on, if you have any big takes or not, is there were a ton of new layer 1 raises announced this week. And if by intention to add like fuel to the flames, and like people were already upset about like Gmove and you know, some revelations coming out about different projects. I'll just list off three. There's Camp Network, supposedly an IP focused layer 1 blockchain, maybe like Story Protocol. And then Through, which is the coming from Unto Labs or Unto. I don't know how they're pronouncing it, but that is the like maybe SVM Firedancer adjacent, not super clear, but probably going to be some high throughput chain where the founder is the ex Firedancer lead engineer, Liam Heeger. There was a lawsuit actually. I believe it was Jump sued him after he left the organization to then go and found this effort. So they settled and they're good to roll, and they've announced through. So clearly that's not going to be an issue, and they're moving forward. And then Meden is another one. Supposedly like a ZK based chain with like public and private transactions with client side execution. They called it an edge blockchain, which is maybe a little funny. I don't know. Do you have any big takeaways here? Is this just like more of the same? Can we expect anything exciting? I think the one that maybe sticks out at me a little bit at the moment is through and seeing what Unto Labs can do and what Liam can do. Just knowing that he worked at FireDancer and was a lead engineer on that that client. Sorry, I was looking at that word. I think gives a lot of weight and like credibility to what he's building. But it's pretty sparse and light on details today.
Yeah, I don't have too much to say necessarily on the individual chains themselves. I wouldn't say any of them are particularly inspiring. I mean, another IP chain, another SVM fork in Miden was like originally, I believe originally acquired by Polygon, taken in-house, and now is like being pushed outside in the same way. I'm blanking on their DA layer's name. They did basically the same thing for them.
Yeah, they did that with like Hermes as well.
Yeah, they like acquired a bunch of chains. They were going to be the Swiss knife, yeah, layer 2, and then now each of those is becoming their own project, which is interesting in its own right. But to me, it's like, okay, it's a broader question of why are a bunch of L1s launching? This is a big question I was thinking about, and I think there's two things that are driving this. One has been this long-standing, at least perceived, quote unquote, L1 premium, that if you launch like an L1 with your own validator set, that for some reason you should have some sort of premium versus any other chain, like an L2, L3, etc., which I'll argue doesn't really exist in a moment. But another piece that I think is super interesting is this, in my head, is sort of the opposite of what we saw a few years ago, where every new chain was an L2 and had like Ethereum aligned language and like was like chanting, "We are Ethereum, we are Ethereum," and it's like completely 180 from that point of view. And it's in fact people, I feel like, not even wanting to associate with Ethereum whatsoever is another motivating factor to build a separate L1 versus a rollup. So I think both these factors are super interesting. On the L1 premium front, me and Bach on one of our morning calls had a pretty heated debate on whether the L1 premium exists. He was very adamant. It very much still does exist. My argument was like, in the public markets, how these things like are actually valued at the end of the day after years of being live, like L1 premium does not exist and should not exist. I think the bigger point is it does not exist. And I think, you might see these three raises as like check mark to Bach. Like he may have won this argument, but really I think what this comes down to is like a difference between expectations and reality. Like there's still this expectation, and like people talk about it too, of like there is no one premium, right? Like people just expect that there is one, and so that shows up in private market valuations or just in like how people construct their chain, because they think at some point in the future that the market will value these things as more. But you don't actually see that in the public markets. Like if you take a fundamentals view, like the actual multiple on top of fees generated for chains is like pretty consistent around 100 to 200, regardless if you're an L1 or an L2. And so for that reason, I don't really think the L1 premium exists. I also had a tweet the other day where I have a very strong opinion that like L1s and L2s and L3s, like it's all the same thing, right? They're just chains. How you construct those chains, whether you have multiple validators and multiple leaders, or you just have one single sequencer, is like largely irrelevant to like what these things are. what their strategy is, like, and how they accrue value, which is people paying to use the chain, or if you have some sort of like enshrined application, then you can add like additional revenue through those apps. And so yeah, you brought up the tweet I have, which is like, these are just chains. What matters is a specific strategy to get applications built. And there's been like, so if you look at Base and Solana, one is an L2, one is an L1. In my mind and most people's minds, they are the same thing. They're competing for the same sets, or at least generally same sets of builders and same sets of users. And they're basically this platform for third-party application builders to come build. And then as a result of more quality applications getting built, they accrue value at the transaction level through REV. So in my mind, like, all that matters is the strategy to get applications built, whether it's like, again, these third-party builders, or you like home built your own applications or one application, and then how that translates into top line, and that can be, again, REV and app revenue. And then the reliance on bridges versus native assets. The only thing that an L2 has that an L1 maybe doesn't is an enshrined bridge, but it's really just a bridge. Like an L1 can have a bridge to Ethereum too. It's just like you may get different properties within that bridge, like the ability to escape, forced inclusion, etc. But what really matters is like the actual amount of assets in the bridge, because like now, like potentially a lot of the REV of the revenue that you generate is specifically because of assets that are initiate from another chain. The more that you have actual native issuance, the more value you should have, basically. And that's regardless of L2 or L1 framing. And then censorship resistance is another piece, and how you get there. Like, people just want to know that their transaction is going to be included. And you might have better assurances on the whole as L1s versus L2s, but I know like there are plenty of L2s today that have very, very strong censorship resistance, and L1s like hyperliquid, like that, like you have pretty low, because you can just have Jeff update the Oracle whenever he pleases. So to me, like, these are the only properties that matter. L1 versus L2, irrelevant. And I don't think an L1 premium does exist, should exist. And so that's my long rant.
I don't think Bach's going to like that inclusion about hyperliquid, but I like your point about the transition from like every raise being an ETH L2 or some form of like ETH rollup related project to, you're right that we are seeing like, nope, just native L1 blockchain, native like SVM based blockchain. There's been a really massive shift there, and that started happening last year. You know, we started to see a lot more like SVM chains and even move chain raises kind of coming out of the woodwork. But now that you mentioned it, I had not even been thinking in that mindset that like the ETH L2 and like a lot of the EVM chain raises have really reduced from a few years back, which is an interesting point. And I do think, to the point about the L1 premium, like I think a lot of this debate just stems to like whether it exists in the minds of people in the liquid market who actually want to buy these tokens, versus whether there's something about the sort of market dynamics that allow L1s to continue raising at certain valuations and then launching at certain valuations and then declining to certain valuations, which is not something that we've been able to like rid the industry of as of yet. That's been ongoing. I think we can call it there. That was a good one. We went for a good while and got to chat about all the fun things that we're keeping up with, that maybe we don't normally get to chat with you, the listeners, about. I'm going to give one last shout out and reminder to Permissionless. It's coming up end of June. You heard it once before this app. Get your tickets, 0x10 for 10% off. Me and Westie, we're both going to be there. Picacho is going to be there. Cashflow's Connor will be there. A bunch of other people will be there. Come out, meet us. If you got one last thing to leave the listeners with, Westie, what do you want to say to them other than hot air rises?
Damn, that's what I was gonna say. L1s and L2s don't matter. and this mimetic premium doesn't matter how much. Well, the only thing that matters is how much value you capture at the end of the day, and let's build businesses that actually accrue revenue. It might be shocking to say, it might be, not the consensus, but yeah, let's build things that accrue value.
I love that. One of my catchphrases has become build products that people want to use and maybe also pay money for. So let's keep going for that end state, hopefully at some point, but we will see you all next time. Thanks for coming on, Westie, and thanks for listening, guys.
Yep. Peace out.